Yes, we are continuing with our webinar and we'll be conducting our second webinar. Let me share our PowerPoint presentation. Yes, my name is Faustina and we are continuing with our webinars from where we left off. Okay, yes. So today we are going to have a look at cash books and ledgers. Okay, that's what we are going to concentrate on. This webinar will cover a lot on cash books and ledgers, and it will cover an example. We are more of like going to look at an example, and then from that example, we'll be able to share in the information that will help in terms of you recording your transactions for the assignment. So this is good for you in that you are going to be getting more information because I am going to cover a lot of topics in the example that we'll be doing, and in me covering a lot of topics, I'll be explaining the various concepts in us working on that example. So it will be more of talking whilst we are working on an activity. Okay, so our cash books, basically we have explained that our trust and business transactions should be separated, which means if you are having a database, you are using a system like Sage, or you're using Pastel, and you're not using low accounting systems. So what happens is that you should create two separate databases. So it will be like you are holding two companies because you cannot mix the transactions in one sort of like set of books. So you should be separating them. So let's look at our trust books. So when we look at the trust account, we've explained that you can open as many trust cash books as the firm requires. So say as a practice, you have a particular client that says, for my collection matters, may you open a bank account that I will require you to furnish me with the bank statements, and you have your general trust account, and say for instance, then you've got a conveyancing trust account. So you can open as many bank accounts as the practice requires or as you see necessary. Though the only catch is that you will have to record those cash books in their separate, you will have to record those bank accounts in their separate cash books, which means you cannot mix the transactions. You have to record them separately. Okay, so with the trust account, basically, trust accounts are easy. So we'll have our cash books. So us having our cash book, so we can have cash book number 1, which is FNB, cash book number 2 is Standard Bank, cash book number 3, ABSA. So say for instance, those practices that are appointed by banks, I know that usually banks would then say, open the account with us so that when we transfer the money, then it's immediate, and you can conduct your transactions immediately, or also it is for their benefit. Okay, so with that, then it means you will have to have several cash books. So what I will do with the cash book in our example, I will illustrate how we draw up a cash book, and with that cash book, with the trust, the only ledger that comes out of a trust account, or our trust accounts, is the trust creditors ledger. So with the trust creditors ledger, it means money that is put in a trust account or that we are supposed to hold in trust is only for our clients. And these clients, when it comes to accounting, we call them trust creditors. And with them being trust creditors, then it means we have to account for their transactions under their ledger. So say, for instance, you handle a matter for Mr. Z, and then that transaction for Mr. Z, it means the money will be deposited into the trust account and you will make payments on behalf of Mr. Z. It can be to him, it can be to, say, if it's a civil litigation matter, to an advocate. It can be for anything that you are supposed to pay. It can be correspondent attorneys that you are paying. It can be you are paying the sheriff. So if the money was paid into the trust account, then it means it will be recorded in the trust cash book. The trust cash book will be our book of prime entry, and then from there, then we'll post it into Mr. Z's ledger account. So we do not create a ledger account for the advocate. We do not create for the sheriff. No, we just create for Mr. Z and show that this is how his money was utilized. Okay. Happiness, that's how we record trust transactions. And then when we move from there, we also have the business side of things. Business, the matters belong to the firm, so the firm has to account as we have previously indicated. And in us accounting, so today we are going to cover our business cash books. So the same with the trust account. With the business account, you can have several bank accounts, or you can have one or two bank accounts. You can have savings accounts. You can have investment accounts. So for those savings and investment accounts where you are holding excess funds, then you have to also create cash books for those particular accounts. Okay. And the other thing is that for our petty cash, we also record what is called a petty cash book. So usually with a petty cash book, we can as well record it in a similar manner as a normal as a normal cash book that we open in various accounting systems, or you can create it as a ledger, but the transactions that you are posting will show the balances that are opening balance, and they need to show all the transactions that went in, all the money that came into the petty cash account, and the money that was paid for buying any petty cash items that we require in the office. And then it will also show the closing balance, and then that closing balance is what goes to your trial balance. Okay. And so after having our cash books, so as of now, I'm talking about cash transactions. So for our cash transactions, we also need, remember, we've got the double entry system. So with the double entry system, we'll need to post to our ledgers. So with the business account, we've got business creditors ledgers, we've got debtors ledgers. This is for debtors, it's mainly for our matters. So which means it's for the clients, of the firm. So when we are recording transactions that we are having between the firm and our clients, and which we recognize as business matters and which are not trust matters. The moment you sit with excess in your business where you are holding money on behalf of a debtor or a client in your business, then it means you have to transfer it into trust, because now it becomes trust money. You cannot hold money for your client in your business account. Okay. And the other thing, what we also have, we've got what we call a business general ledger. So with a business general ledger, this is where we post the transactions which are like general, your assets, your liabilities, which are like bank borrowings, loans that you are obtaining from friends, loans that the firm or practice is getting, say, for financing of a property. So those are posted in a general ledger, and also that's where we record our income, our expenses, our assets, our equity. We record in the general ledger. So I'm going to show you all this when we are working out our example, and then we are going to separate so that we show that these are assets, these are creditors, and then this is equity, and what is expenses and income. Okay, so yes, this is what we are going to cover. So all the explanations is I'll be working on the example, then I will more of like be giving in some concepts and some tips on things that you should take note of as I'll be presenting. Okay, so our example is we are going to be recording our transactions. We are going to have an example for trust transactions, an example for business transactions. And in these examples, what we are going to be doing is that we are going to apply our double entry principle, which is critical in bookkeeping, which is critical in accounting, because then it is the one that helps us with producing our financial statements. And then from there, we're going to also apply the VAT, concept value added tax. So with this example, it will really assist you with your assignment. We are going to also apply the concept of what? Our investments, section 864s. So we're going to also apply, have a question on that, and then we record it, and I show you how to record it. And also we're going to do as part of that example, we'll have an element of conveyancing, an element of a correspondence matter or collection matter. It is all going to be covered in this example. Okay, thank you. So we are going to move from here. I'll stop sharing this PowerPoint, and then I'm going to go through and share our Word document, which has got our question. And from that question, then we will start recording. I am going to record in Excel. Thank you, and illustrate to you. To share our question. Okay, this is our question that we are going to go through. This is our question. So what we are going to do is that we are going to record transactions for Mr. Y. And the question says, Mr. Y handles the following transactions in his firm, Y Attorneys Inc., which is VAT registered. Okay, so we are given information. Each time you are given a question, please read every line, read everything, because if you do not read, you will miss out what you are supposed to do. So items like VAT, you are only told as part of the question, and if you miss it out, then it means you are going to answer, and when you're answering, you are going to disregard VAT, or you regard VAT. When you regard VAT, and then you realize later after finishing that the question is actually saying the practice is not VAT registered. And if it's not VAT registered, the treatment is totally different. Okay, so read the question from the beginning and highlight all the critical important issues. Like in this case, the fact that we are recording for Y Attorneys Inc., then we can already pick that this is an incorporated company. This is a company, and it's not for Mr. Y in his individual capacity. Okay, so the way that we record transactions is actually going to be different from the way that we record for a sole practice. So you need to pick up all those details and see how you record transactions. And the fact that we are told it is VAT registered, the way that we record also becomes different. Okay. And then we are told that for the trust, we've got the following trust transactions. So we've got an opening balance of 2,500 for Mr. P Meta Y20XX stroke 138. Okay, so already we are given information from the beginning, so we need to show how to record that. Okay, I am going to stop sharing, and then I am going to share our Word document side by side with our Excel worksheet, where we are going to post these transactions. Okay. So I'm going to share our worksheet. This is our worksheet. I hope you will be able to see. So what I'll try to do is I'll try to minimize the side of the question and then try to center the question and minimize it so that you can see. Hopefully you'll be able to see as I highlight the most important section that we want. It's this section of the worksheet, because with the worksheet, if you can be able to record your transactions, then that becomes easier. Okay, so as I have indicated before, we are going to record in our trust cash book, business cash book, into our ledgers. So what we'll start with the trust transaction. But what I will try to do is that I will also try, this is a firm, so some transactions will relate with the business account. That is, especially those ones where we are recording our fee. So when we are recording our fee, it will be recorded in our trust side and also business side, because we are transferring, we are taking what is ours from the trust to the business side. Okay, so this is basically the layout of a T account. Let me try to maximize and then I'll share back. So this is the layout of a T account. Sorry, I come out, I've added sheets which I'm not supposed to add. I'm going to remove those sheets. So this is a T account. So in our assignment, we expect you guys to record your transactions in a T account. Why is it called a T account? Remember, we talked about the double entry system, where we said every transaction should have a debit and should have a credit. Okay, so for a cash book, when we look at it, it will have the debit side, which I'll highlight yellow, and it will have the credit side. But for a cash book, to make it easier for you, I would say that the debit side, we record what the firm or the practice has received in its account. So remember, for every cash book, there's a corresponding bank account. For every cash book, there's a corresponding bank account. So what we are recording should tie up, should be able to be reconciled back to the bank statement. Okay, so in doing that, so we've got receipts. When we receive money, we record them on the debit side, which is the top part. And when we make any payment, we record that on the credit side. So already we even write that these are receipts, these are payments, debit and credit. Okay, and why it is a tier account, you will see this is the date, this is the description, this is the amount, and we are going to put a bold a line to show that we are now going over to the credit side. So on top is the bold, which is the heading, and then our columns are divided by a bold T, which shows the debit and credit side, and we call it a T account. We call it a T account. Of course, when you are recording for the assignment, it's very easier, and we expect you to record in a T account. This is what we require you to do, and make sure that your transactions are fully narrated. Why are they fully narrated? They should show the date, they should show the description, they should have an amount, and would then say you have properly recorded your transaction. So if someone is having a look at your accounting records, then would say your accounting records are properly recorded. Okay. I am going to share back our assignment, and I am going to minimize. Hopefully you'll be able to see. So our T account is clear, and this is our question. Okay, I'll also try to, yeah, I think it should be clear. So our question, if we look at our trust example, we are told that we've got an opening balance, and these transactions, they occurred in August. So this is for August 20XX. Okay, and if we look, we've got an opening balance of 2,500, and this opening balance, which means in our trust account, there is money which we are holding for Mr. Peacemaker. Okay, so opening balance usually occurs on the first day of the month, which is 1 August 20XX, like that. So this is our first transaction. And what is it? It's an opening balance. Yeah. It's an opening balance. So how much are we having? 2,500. So it means that this is going to be continuous every month, like what we are told. We are supposed to record our records, and we balance off. And that balance that we are having, we are supposed to come up with a list of creditors to say whose money is in the trust account. And when we come up with a list, then we are able to tell when we start the next period, we'll be able to continue. Okay, so our opening balance is 2,500, and with our trust account, we are told it can never be in debit. It can never be in credit. Okay, which means it can never have an overdraft. We can't ask for an overdraft, and we should not allow bank charges to make our account into an overdraft. If it is in an overdraft, your auditor is obliged to report to the Legal Practice Council when they conduct their audit. And whenever they do that, the Legal Practice Council will send in emails over to you. And when they send you emails, they will ask you to explain what measures are you are going to take into place for you to mitigate such a position. So it's not a nice email to receive, because most people panic the moment that they hear from the LPC. So you would rather always maintain a trust account with a positive balance. With some people, they deposit in, if it becomes dormant, you find they can deposit in 100 Rand every month or every 3 months, so that the account is not closed. Remember, according to Section 86(1), a legal practice should keep a trust account. So in keeping a trust account, it means there shouldn't be a period where there's no trust account, whether it's dormant or whether it's active. Okay. All right, so this is our first transaction, 2,500. And then remember, I said with our trust transactions, the only other ledger that we can have is the trust creditors ledger. So this is our trust creditors ledger. With our ledgers, it's the same concept, a T account. This is our T account on top with a debit side, with a credit side. Okay, this is our T account. So with our T account, the same debit and credit. Let me highlight it in gray. Like that. This time I'm not going to separate between the two, but this is the T and then this is the borderline. Okay, and our first transaction, it's an opening balance and it's for Mr. P. So Mr. P is our trust creditor, and this is for his Meta 20 Y20XX stroke 138. Okay, so that is the title of our ledger, because then we can identify it with the owner of the ledger. Okay, and we are told this is an opening balance. And as you can see, the good part about a trust account is that we call these trust creditors, which means a creditor is supposed to have a credit balance. A creditor is supposed to have a credit balance. So on our cash book, you can see we've recorded it's a debit that we had. So to complete the double entry, we debit the cash book, we credit the ledger. So this is the ledger, we are crediting it, and it is an opening balance, which shows that it's money or balance brought forward. We normally would call it balance brought forward, or you can call it an opening balance. We are bringing it forward from the previous period. Okay. This is what we record. I'm going to minimize our sections, especially this one of the amount, so that we can have space and our ledger can be visible when I'm illustrating. Okay, so we have done our double entry recording, debit and then credit. So for every transaction, make sure that we've got a debit and we've got a credit. Okay, happiness. Let's move on to the next one. And then we are told that there was a civil matter which was handled by Y Attorneys Inc. And under file reference Y 2011/150. On 5 August 2011, Mr. James pays 180,000 in the trust account for us to assist him with his civil litigation matter. Okay, so it's a payment, it's a receipt. We are receiving money. So the first thing that we do, we are receiving money from Mr. James. So we record it into our trust cash book. This is our trust cash book. Very important. So we note the debt. So always ensure that you record your transactions completely. They should have a debt. They should have a description. In this case, who is paying in the money? This money, the corresponding entry, it's Mr. James matter. And which matter are we recording? It's why. So you give as much detail as possible. Give as much detail as possible so that you will be able to trace the transactions. So in this case, when we record like this, we know that there's a ledger that we are going to open for Mr. James. And how much is the practice receiving? 80,000, just like that. So you record the amount, and to complete the double entry, you will come to your ledgers. So now this is a new client we are going to open for Mr. James. is our trust creditor, and it's Y20 XX stroke 150. So this is his meter. So the good thing about having references, I realized here I've recorded is 80. It is supposed to be 180,000. The good thing about having references is that Mr. James can come appoint us for various meters, but we are able to track our meters if we have concluded a meter and if we are still running with the meter, or if we were paid, or we are still to collect from Mr. James, or if we have closed that particular file. So it is easy because a client can come and say, okay, can you attend to my litigation matter? After that, when they are buying a property, can you attend to my conveyancing property matter? And then from there, they can ask you to probably carry on with the collection matter. So when we are recording these transactions, we can separate them according to file references, and then it makes it easier. Or you can separate them by saying, Mr. James, this is civil litigation 2020, number 1. You can say, you just have to be creative and see how your firm can reference. And usually with these file references, then a register is kept. The firm would keep a register, and in keeping a register, you find then the firm is able to follow through with the matters. Okay, so our transaction occurred on the 5th of August 2011, and the description, it's a deposit into our bank account. So if we want to trace this transaction, we trace it against our bank, our cash book. So the money got into the bank. So it shows that we will go to the cash book on the 5th, and then we are able to record it. Hence, our description relates to the bank, so that when you are looking for this transaction, then it is easier. And in this case, I am going to leave it with no further description. But say, for instance, if it was coming from a third party, then we would show that, okay, money came into the bank account, but it was deposited by Mr. So and so, so and so. You see, blah, blah, blah. And then we indicate, just giving more detail, so that when you are looking for these transactions, you are able to find them. Okay. And in this case, how much was received? 180,000. So we have debited the cash book, we've credited the client, which is our trust creditor. So this is how we do our double entry in the trust account. This is how we record. Okay, and then let's proceed with the matter of Mr. James. We are told, I'm going to deal with these matters according to matters, not according to dates, because if I want to do according to dates, you'll find then I have to jump from one matter to the other and see which one occurred first. But in your answers, what you can then do, you can always sort the transactions afterwards, so that you sort them chronologically, because when we are recording in accounting systems, they sort transactions chronologically. But when we are doing it manually in Excel or writing it, it is usually difficult. But the thing is that when you're using your bank account and your receipts, you can record according to chronology, because you record as things okay. But in this case, because we are giving an example, we want to give a holistic approach, so that you can see the particular matter, we track it until it is finished. Okay. And then we are told that he appoints an advocate, which is Mr. Y appoints an advocate who renders his invoice after attending court, amounting to 8,500. So the invoice for the advocate, it's 8,500. Okay, so the firm is given that, and we are told that the advocate is paid on the 15th of August 20XX. Okay, so the advocate is paid here. So our interest is in what? Recording the payment. Our interest is in recording the payment, and our amount is 8,500. So the thing is that, like what I've said, as you can see, we are not dealing with the advocate, but we are conducting the matter on behalf of our client, Mr. James. So under the same file, you can see it's under the same file. That's where we are paying. So when we are recording, we record everything under the same file. Okay. And in this case, the money is in the trust account. Okay. So we have got no need to record this transaction in our business side of things, because the rules say when money is in the trust account, then pay whoever on behalf of the client from the trust account. Where there is no money, that's where we revert and utilize the business account. So it's more of like we are borrowing the client and we'll collect later. So we can only do that when we are utilizing our funds. But where the funds are already paid in, then everything is conducted from the trust side of things. Okay, so we are told 15 August. 15 August 20 XX. Sorry. So this is the payment. Sorry for that. Okay, so our payments, this is the receipt side. Our payments, they're okay on the payment side, on the credit side. So this is easy to illustrate. If you can go through this webinar, it will be easy for you to record the transactions in the assignments, because I'm making it easier for you. I am showing you how you follow through, especially when it comes to the cash books. Okay, 15 August, we are paying the advocate on behalf of Mr. James. So our file reference is Mr. James. Y20 XX stroke 150, and here it's for the advocate. You see, so we are specifying to show that if it was advocate, if we had a name, then we would show, okay, it's advocate Kumalo or it's advocate Smith. We specify so that when you go through, you'll be able to tell we paid an advocate, who is it for, and then for this matter. Okay, and our amount, we are told it's 8,500. Okay. And for us to complete the double entry, so every transaction, always remember, do not take it for granted where you say, I will record the creditors later. You will find you will forget. You will forget. And the next thing is that you will have transactions which are incomplete. You will have transactions which are incomplete, which is not nice. So I'm going to enlarge that. And this is the bank account. We are paying from the bank or the trust account. If we've got several trust accounts, then we can indicate that this is trust account number 1 or number 2 or cash book number 1, cash book number 2. Okay, and our will indicate then it's advocate. And if it's a lot of advocates, you can then specify the surname. Okay, so in this case, we received 180,000, and already we have instructed and we're given an invoice. We told the client we've appointed an advocate, he spent a day in court, and he has given us an invoice. So we have to communicate with the client as well in whatever that we are doing. We don't just pay, we inform the client so that he's aware. And after doing that, we pay the advocate, and then we show, you can see it is now showing how we are utilizing the 180,000. And this will make it easier for us to be able to know what is in our trust account. Okay. And then the next transaction is on 20 August 20XX. Mr. X, sorry, Mr. Y raises an invoice for 30,000 excluding VAT, got it approved by the client, and on 25 August 20XX, he transfers the fee. Okay, so in invoice, this is now the firm which is getting its funds. Okay, it's excluding VAT, and we are told that the practice is VAT registered. Okay, so this transaction, if you can look at it, it has got a component of a business part, it has got a component of a trust part. Okay, the business part, I'm going to illustrate in our worksheet. This is an example. So I'm going to record it as a journal entry, you see, so that you can see how we account for fees. But this is this is just a worksheet for us to get our bearings, and then from there we go into our ledgers, we record the transaction. Okay, so normally we then record the date, which is 20 August 20 XX. So my dates, so this is our worksheet, just for us to record and then show how these transactions are recorded. So in this case, we are told that we are raising an invoice. So when we are raising an invoice, it means we are creating a data. So we are saying this is our client on the business side. We've rendered service, and on that service that we've rendered, we are now claiming our fee. So this is more of like an asset of the firm, in that we have to collect cash at the end of the day. And the good part about having money in trust is that we can then easily get our money transfer from the trust account into the business. Okay, so in that case, when we are recording, we should have a debit and a credit. So we want to show which accounts are affected by this transaction, which accounts are affected. So in accounting, when we are recording our transactions, we are interested in knowing the debt, we are interested in knowing the account which is affected, and we are interested in knowing the amount, because the amount will overall give us the financial position of the firm, the financial performance of the firm, the cash flow position of the firm as a holistic view. Okay, so in this case, 20 August, it's an invoice. So with an invoice, what we do, we debit our client, which is Mr. James. It's an asset, it increases. So if you look at the accounting equation, remember our accounting equation, let me write it here. Our accounting equation says assets is equal equal. I just want to illustrate equity minus liabilities. Okay, let me write in and liabilities. Okay, so in this case, when we've done work, what are we doing? We are creating our asset, okay, which is a data. We're going to sit with the data. So our asset in this case, it is going to be our data, which is 30,000 plus the VAT, because it is our data, we'll record the VAT in full plus the VAT. So this is our data, right? So this is our asset. So in this case, when we are debiting, we're going to debit the account of Mr. James, particularly this Y20X stroke 150. How much? 34. So it is our fee, because when we are recording from, when we are collecting from him, we are going to collect including the VAT. So if you go back to the last webinar, you will see we illustrated how VAT is calculated. If you can go back, and then you can apply this concept of excluding, including, like in this case, we are told it's excluding. So if it's excluding, which means the 30,000, they have not taken VAT into account. So what we're going to say, it's 30 plus VAT. That's what the client owes us, which is an asset, right? And then we are going to credit the double. Now we are doing the double entry system. We've got our fee account and we've got the VAT account. So VAT, if we are VAT registered, we are collecting on behalf of SARS. Remember, we discussed that. We are collecting on behalf of SARS, behalf of the government, and it is a requirement according to the VAT Act. And we are citizens of the country, so we live by the rules of the country. So that's what we do. Okay, so let's show our fee. Our fee is our equity. So at the end of the day, fee will grow the firm in that it will produce equity. It is for the benefit of the director, the shareholders, and the practice in a whole. The practice in that the practice will be able to cover its expenses, okay, and then the surplus will come to the director. So our fee account, we are going to we're going to credit it with how much? 30,000. Okay, that why we are crediting with 30,000, that is what belongs to the firm. That is what belongs to the firm. The difference, the VAT does not belong to the firm. It is not our money. Okay, and then the VAT account, then we show that we are collecting 4.5 and this does not belong to us. So this is how we record this particular transaction, and this transaction we are recording it on the business side. Okay, so this is for the business benefit. Okay, and if you go back to our accounting equation, this is our asset as a business, but it's made up of equity. How much is equity? Okay, how much is equity? In this case, I'm going to copy here. I'm going to copy and then paste here. How much is our equity? Our equity is 30,000. And what is our liability? We are owing SARS 4,500. Okay, so our asset 34,000, and then our equity 30,000, our liability 4.5. Asset is equals to equity plus liability. So if we can add, we become to our assets. Okay, this is the accounting equation. This is how it applies. So we want to record this particular transaction into our books. So when we record this into our books, we are going to affect, you see, now we are going on to the business side. And it is not a cash transaction. You see, it's not a cash transaction. Hence, I'm recording it in a ledger. It's not a cash transaction. It's a transaction where there's no movement of cash, and hence I'm doing a journal entry for illustration. And then we take it when we go to our transactions. We look at our business data. This is our business data. So we start with the matter of Mr. James. Mr. James, and it's Y20 XX stroke 150. So this is the matter that we are recording this one for Mr. James. Okay, and as we have indicated in our worksheet, we are debiting our data, which is Mr. James. So we are debiting Mr. James. Okay, this is our business data. So we are given a date 20 August 20 XX, and our description, it will be our fees plus VAT. Usually, because we are VAT registered, we can always say civil or civil litigation fees, or the more detailed the better, and then you can indicate with VAT or you can leave it. So when we record in our data, we've already illustrated our journal entry. There's no need for us to record the fee. We record the VAT separately because now we know the amounts. So we just record it in full. So we are saying Mr. James owes, he's got a debt which belongs to the business until it is paid. He owes 34,500. Okay, and then the next transaction, if we can go back to our worksheet, it's the fee account. So a fee account, the VAT account, these are general ledger accounts. They're just general ledger accounts. They do not relate to the clients. They belong to the firm, you see, and then we are accounting them to the third party. So as they are general ledger account, this is our general ledger. This is our general ledger. So we'll start. So the general ledger usually, then you can split it, or you can, the way that you want to record, you can have fee accounts, you can have expenses on their own categorized, you can have the liabilities on their own, the equity on their own. Okay, so if you want to be smart, that's how you can then have your general ledger just like that. So this is the fee account like that. So as you could see on our worksheet, we've debited Mr. James, and then we are going to credit our fee account. And this is on 20 August 20XX. And how much are we crediting? So this is Mr. James Y20 XX stroke 150. We know this is the file reference, so if you can go into it, you'll be able to see the fee note. And how much is our fee? Our fee is 30,000. Okay, our fee is 30,000. And then the next thing, we can then record, minimize, so that you can see the holistic picture. And then we record, this is our fee account. We can then record our VAT. So VAT, whether it's a debit, it's a credit, everything we record in one account. So that at the end of the day, we are able to account to show SARS what we overall owe them. Okay, so because when we are paying to SARS, we don't pay separately and claim separately. What we do is that we have our debits and credits, whichever is bigger is what we pay over to SARS, or is what we claim from SARS over a given period. Remember, we said we are registered on a 2 months period. The third month we submit, we pay, we submit, we claim. Okay, so it is the same concept, same concept. So in this case, it is the VAT is coming from the matter of Mr. James. And how much is it? 4,500. Okay. All right. So we've recorded our first transaction, which is the business side of transactions. So we've recorded that. But we are then told it has got a second part on the 25th of August, which is this part. Then there was a transfer. So now there's movement of money, a transfer. There's a movement of money. So when there's a movement of money, then we can utilize cash books. You can do an illustration of how transfers are conducted, but we can then, for the sake of time, we can now utilize cash books because there's movement of money. And the first transfer, we can show it in the draft cash book, 25 August 20. So we are transferring Mr. James, and it's our fee transfer. And when we are transferring our fee, or when we're taking our fees, then what we do is that we take, including the VAT. Remember, we are the custodians of SARS money. We are supposed to account, and how we account for that money, we account for it from the business side. So when we are collecting the money, we collect it from the trust account, including our fee. So we collect the full amount, 34,500, which is 30 plus the VAT, which is 34,500, as we've previously said. And this is a payment out of the trust cash book. It's a payment, hence it's on the payment side, and it's on the credit side as well. So the debit side of this, it's going to come into our ledger. So we indicate 25 August 20 XX, then the bank. So in this case, it is what our fee transfer. Okay, so it's a fee transfer. How much is it? 34,500 fee plus VAT. Fee plus VAT. Please remember that this is very crucial for your assignment. Okay, this is how we record. We record our fee. So this is the part of the trust account. So this money is moving from the trust account, and where is it going? It is going to the business account. So we come, this is our business account. So with our business account, the concept is the same. The layout of our T account is the same. We've got a debit side, we've got a credit side. Okay, and this is the T part, we've got debit is the same, everything is the same. So how we record is the same. So in this case, I'm going to leave a line. I'm going to leave a line. With this line, it is going to be for our opening balance, which we haven't gotten to. And then we are going to record this as our first transaction. So on 25 August 20. What is happening? We are receiving money from trust. How much are we receiving? From whom are we receiving? We are receiving from Mr. James for his matter. 50. And how much are we receiving? We receive, including the VAT, like that. Okay, and then we go. Mr. James has paid from the trust. He paid us money into trust. We took our money. Then what happens? The double entry, which is to complete the double entry, we go to our business debtors ledger, which is this one, business debtors ledger. And already, remember, we've recorded this transaction, and now we are being paid. So we are going to credit Mr. James to clear off the debt that is owing the practice. 25 August 20 XX. And how much? What is it? So in the bank account, and what is it? A trust transfer. So a trust transfer has got how many transactions in total? 4 transactions. It affects 4 accounts. So you should always remember that it affects 4 accounts, just like that. It is affected. So we've collected from the trust account our fee, and we've collected the VAT money. So with the VAT money, we're going to sit with it in our business account, which is here in the business ledger, sit with it until we are to pay it over to the receiver. And when it comes to our fee, it is going to sit in our account until we start utilizing it. So as we are given business transactions, that's when we start utilizing our fee for the benefit of the practice, for the benefit of the directors. Okay. So that transaction, if we can take a look at it, the transaction of the civil matter, we've completely recorded it. Okay, let's move on to the conveyancing matter. And then we are told that conveyancing matter, the Y20XX stroke 151, property for 1.750 million, 1,750,000. Transfer duty 26,625. So the transfer duty is payable to SARS. And who pays the transfer duty? It is payable by the seller. And then we've got attorney's fees plus costs. of 33,803. Okay, so we've got fees and then the costs. They have to pay for the deeds office. They have to pay the parties. They have to pay the systems that they are using. So all that it's included in 33,803. And then there is a VAT on the attorney's fees, which is 4,852.50. So included in that, the fee component will have to determine what is the fee component that has got that VAT element, and the rest would be disbursements. Okay, we're going to disburse that on behalf of the client. Okay, and estate agent's fee, 87,500. So estate agents, so usually with conveyancing matters, they are referred to the practice by estate agents. So when you build your relationships out there with the estate agents, they then refer matters to you. And when they refer matters to your practice, then what will happen is that, of course, when the matter has come to conclusion, that's only when they collect their fee. And the fee of the estate agents is paid by the seller, because the seller is the one who approaches the estate agents and say, okay, look, I'm selling my property for so much. If you can assist me sell my property, I'll pay you so much. So they normally agree on percentages, and this is according to the Property Practice Act. So if you can look at that, you can see it maximum percentages that they are supposed to be paid. Okay, and I know some firms, they also have an element of in estate agents where they conduct this and also pay. Okay, so let's proceed with this matter. And after proceeding with this matter, we'll see how this transaction, remember, it's one firm. It's one matter. It's Mr. Wise firm, Wire Attorneys Inc. This is what we're recording. This is their second matter in a month. You know, this is nice. It means the firm has got a lot of matters that are going on. Okay, and then we are told that on 6 August 20XX, the firm receives 750,000 for a deposit for a conveyancing matter. Also, this conveyancing matter for Mr. Happy. Now we are giving people. So this is Mr. Happy, and 65,280.50 for the transfer duty. So Mr. Happy is the purchaser. So this is from Mr. Happy, actually, from Mr. Happy. So we are receiving 750 from Mr. Happy, and also 65,250.50 for the transfer duty fees and costs. This is also coming from Mr. Happy. Mr. Happy instructs the firm to invest the deposit. Let me make this about. He instructs the firm to invest the deposit immediately in a Section 86(4) account. Okay, so you understood, we explained about the investment accounts, and then so we are putting this into practice so that when you attend to the assignment and also in your day-to-day practice, you are able to record these transactions. So happiness, these are cash transactions. No need for us to do journal entries, but we can always do journal entries whenever you want illustration. Okay, I'm going to minimize so that our T account can show the full picture. We go back to our trust cash book. So how much are we receiving in trust, and when are we receiving? 6 August 20XX, and we are receiving for our conveyancing matter Y20XX/151. So Mr. Happy, and its file reference Y20XX/151. Okay, and this is okay, the deposit. So we can indicate the deposit, how much are we receiving. So in your assignment, this is what we expect from you. Don't just put amounts. You know, you guys tend to be, some people tend to be lazy, and then you know you only see amounts 2,500, 180, and then you see 750,000, and you don't see where is it coming from. They don't put anything. That is not what we do in accounting. We go into detail, we indicate what is what. Okay. And also on the 6th of August, Mr. Happy also pays. So it's same day. And Mr. Happy, I'm going to copy and then remove. So this is for the costs, transfer fees plus cost. Ne? So it's fees plus cost. I'm just going to put it like that. So he also is asked to pay that part by Mr. Y so that the matter can be conducted. So it can be the conveyancing secretary communicating, and then they say, okay, can you carry out? He pays 65 to 80. Okay, so I've recorded 2 transactions. I have not yet done the double entry. What do? We need to do the double entry. Where do we do the double entry? In our ledgers. So in this case, we haven't. I'll delete the legal practice, and then I'll kind of like enlarge our T account. I'm going to format it so that the T part becomes clear, becomes bold and clear. So this is the debit credit, and in this case, is our conveyancing matter, and then conveyancing matter, and then it's Y 20XX stroke 151. So it's Mr. Happy. So like, let's just indicate this is Mr. Happy, the conveyancing, just like what we did with the other matters. We're not specific in terms of what type of matter, but we say Mr. Happy. So this is the part for Mr. Happy, and we're going to record the 2 entries that we have already received in our cash book. And what do we call it? It's bank account. So okay, in our cash book. And in this case, it is the deposit. And how much is the deposit? 750,000. Okay. I'm just gonna remove these lines. Okay, like that. Remove these lines that are coming there. Okay, so that it becomes clear, our ledger becomes clear. And then also on 6th August, okay, and then we also received 4 fees plus cost. So our double entry is complete. Happiness. And then we are told he instructs. So you need to be careful. Every line is very important. Everything that we are told is very critical. He instructs the firm to invest the deposit immediately in a Section 86(4) account. So our Mr. Y opens a Section 84 account, and then with that Section 84 account, then what happens? Then we do a trust transfer. So how do we do it? Money is now going to move from the trust account. So we assume on 6 August 2011. So it's Mr. Happy, the matter of Mr. Happy. We are moving the transaction. Where is it going? Into a Section 86(4) account, just like that. Or Section 86(4) account, like that. And how much are we moving? 750,000. Okay, we are not moving everything, but we are just investing the deposit, because the transfer duty fees and costs, that we are going to utilize it while we are carrying the money. So if we invest now, you would find when we want to pay SARS so that we get a clearance certificate, then it will delay us. Okay, so for us to record the double entry, we are going to create a Section 86(4) ledger, cash book. It's a cash book, because we are going to open a bank account for it. So I'm going to copy. So a T account to make it faster. and clear the transactions. So I'm going to copy. Here we are. Sorry, didn't copy properly. I'm going to copy our cash book. To copy our cash book. Sorry for that. Okay, I'm going to paste it here. So this is a very big cash book. I'm going to delete everything and I'm going to minimize it because for this particular, I don't think we'll have a lot of transactions. So I'm going to delete some rows because this is our section 86.4 cash book for Mr. Happy. So we say Mr. Happy. So it's our cash book for Mr. Happy. And what did we do? We paid out of trust. So if we paid out of trust, then we are going to receive it. 20 August 20 XX, and we are receiving it. Where is it coming from? Our bank account. And it's for Mr. Happy, and it's an investment. That, but anyway, it explains that it's Mr. Happy. So it's coming from the trust account. How much is coming? 750,000. We are investing. So as you can look at it, here it is double entry. There it is. Okay, then we are done. Let's move faster. On 12 August, is 12 August 20XX, Mr. Seller pays 9,850 for the rates clearance in the municipality. For the rates clearance at the municipality. So we're going to like clear the rates at the municipality. Oh, for the rates clearance, and the municipality is paid on the 13th of August 20XX. Okay, so Mr. Seller now for the same transaction, it's the same transaction comes in, he's supposed to also pay, clear the rates, make sure everything is starting on 00 because this is a new person, a purchaser who is buying, new tenant who's gonna stay there. So the previous person should clear his bills. Okay, so it is a receipt in our trust account. So in this case, it is Mr. Seller. The matter is the same, 20XX/15551 is paying. How much is he paying? So Mr. Seller usually just pays to clear his bills. So if it was in a complex, he would also pay in so that we ensure that all the levies are cleared. So he pays 9,850. And then in our trust ledgers, we create a ledger. Okay, this one we've not completed it. 6528.50. Sorry for that. And then for our seller, we create in a ledger. This is our ledger. I'm just going to utilize copy so that it becomes faster. So this is Mr. Seller, and Mr. Seller pays in. When is it? 12 August 20XX, and it's against our trust bank account. How much is it? 9,850. So we've done the double entry. This is for Mr. Happy, same file. Mr. Seller, same file. We come back and then we are told the municipality is paid on 13 August 2011. So we are paying out of the trust account, we go and record on the payment side. So 13 August 20XX. So this is now Mr. Seller for Meta 2011 20XX stroke 151. And then we are paying the municipality. Okay, how much are we paying? 9850, like that. Okay, that is the first leg of the transaction. The second one, we come to Mr. Happy's, Mr. Seller's ledger account. We record the payment and who is being paid. So we indicate municipality so that it is easier to account when we want to account for the transaction. If we can indicate that we paid the municipality, then it will be easy than just to write bank account and we leave it. Okay. And then we are told that on 15 August 20XX, we received the guarantee for 1 million. Okay. If you can look at this transaction, it's for 1.750 million. And we received 750. So in a conveyancing transaction, usually the purchaser approaches the bank and then say, okay, I want to buy a property. I've got a deposit or I don't have a deposit. Depending on their agreement, then the bank will issue guarantees to the conveyancer. In this case, Mr. Y, or our practice is a conveyancer, and then we are issued with a guarantee for 1 million from Time Bank to cover the balance of the purchase price is arranged by Mr. Happy. Okay, so with a guarantee, it is not movement of money. We do not per se record it. It's a document that we keep in place. We inform all the other parties to say, okay, we can see their guarantees. We can proceed with the matter. You see, we proceed with the matter. Okay, and then I see in us receiving guarantees, the other part that we have not done is that I think there's an omission where we haven't paid for the transfer duty. So we need to pay the transfer duty. So after the guarantee, let's say we've received the guarantee. So there's a part where Mr. Y then pays the transfer duty, because you cannot lodge without having a transfer duty receipt. So you go onto the SARS e-filing system, you lodge the matter, and after lodging the matter, they compute, and then they show you the duty. This is tax, which is due to the government, and then you pay. So Mr. Y pays the transfer duty. Let's say he pays it on 15 August 20XX. And how much is he paying? And we are given that the transfer duty is 26,625. Okay, so if you can check, these things are given according to rates that are already gazetted. So if you can more of like check, but this is for the sake of our example, we're given on all the information. So for the payment of the transfer duty, and remember the transfer duty, we received money from him, Mr. Happy. So we go to our cash book, 15 August 20XX. Okay, so this is from Mr. Happy's what file, and this is for transfer duty. And transfer duty, we are paying it to SARS. And where do we pay it from? The trust account. So how do you link? When you go on SARS e-filing, on your business profile, you can load in under banking details. You can load in the trust banking details. You can also load in the business banking details. So in this case, the money is in the trust account. So you select your trust account, then you pay out of your trust account, and then, yeah, you will then obtain your duty certificate for you to lodge the matter. So it is coming from Mr. Happy, transfer duty payable to the government, So we go to Mr. Happy's ledger account, which is when is this? 15 August 20 XX, and then it is the bank. And what are we paying for? Transfer duty. So you can indicate SARS, so we know if it's SARS, it's our transfer duty. Okay, as given that. So it is paid. So the double entry, this is the credit we are paying out. This is the debit. So the debit, what it does, it reduces. We received 65 to 80.50, and already we have taken out 26. We've paid for the duty. So the idea is to show what happened with the money that we received. Okay, let's move on. 18 August 20 XX. The matter is lodged, and on 28 August 20 XX, the matter is registered. Guarantee pays out, and we recall the investment account. Okay, 28 August, or if we can pick out, this is crucial. Okay, this is very crucial. So when the guarantee pays out, it means TymeBank pays in money into our account. So what do? We record. Our idea here is to record as much as possible. Show our transactions. Okay, how much are we receiving and for who? So it's Mr. Happy, and it's Metal Y20XX 151, and this is guarantee. You can say guarantee, or you can indicate this is TymeBank. Okay, how much is our guarantee? 1 million. So from his mortgage, he registered a mortgage. After registering a mortgage, he's paid, and he's got an obligation to then pay back the money. So 1 million is received, and we go to our trust ledgers accounts. We indicate under Mr. Happy, 28 August 20 XX, and then it is the bank and copy, and in this case, it is the guarantee. So we know the guarantee is coming in TymeBank, and it's 1 million. Okay, and the second part, we are told we recall the investment account, and us recalling the investment account, it means we are now withdrawing. The matter is registered, so we have to take the money over. And then the investment account shows interest amounting to 2035 and 101.75 paid to the legal practice fund. Okay, so we start with the investment account. Okay, we are recalling money from the investment account. This is our investment account. So when we are recalling it, we are paying. But we are told that there's interest that has been earned in the investment account. Which date is that? On 28 August 20 XX. And then there's interest. We record it in full. It has been received in the account. We do not split it to show this is for LPC or what. The bank will show the interest in full. And then after showing it in full, it will then show that it then paid the LPC. Okay, so this is the interest in full. Okay, and this interest in full, when it comes to come to the date, then we are splitting it. That interest in full, one is paid to the fund, which is the 5%, and then the remaining will be transferred over back to the trust account. Remember, with the section 86.4, money gets into the trust account, paid from the trust account into a section 86.4 investment, and then from there, money comes back into the trust account. We pay on behalf of our client or our creditor, and then after paying, and then we refund him if ever there's anything to refund. Happiness. Okay, so in this case, 28 August, we are told that 20XX, we are told that there is a payment, LPFF, Legal Provident Fund, so you can write it in full. I'm going to shorten it. So it's 101.7. How did they determine it? So it's basically 2035 multiplied by 0.05, 5% multiplied by 5%, like that. So it gives us what the bank has already paid. And how do we record these transactions? So as part of the interest, remember, as part of the interest, there is an element of 5% for the LPFF. There's an element, whatever that remains, it becomes for the benefit of the client. Okay, so let's record that. So we can only record these transactions in our ledgers. So let's record. We start with Mr. Happy, the interest. So this part, I'm recording this part, this one first. This is a debit, and we are going to credit in date August 20XX. So it is the investment section 86.4. And then this is interest. So the interest that belongs to the practice, we only record what belongs to the practice. 2035 multiplied by what? 95%. 95%. If you record the full 100% and then you show the payment to the fund, I will give marks, but it is not necessary. It is not necessary because in our trust account, we are not going to receive it. But if you record, it is a longer way of recording. So this is what we are receiving. And then the 5%, we then create a ledger for the fund. So I'm copying this one. I'm clearing it. Create our ledger for section 86.4, and this is for file reference Y20XX151, and then this is for the Legal Provident Fund. Okay, so this is the ledger for. So, or we can start with LPFF, Legal Provident Fund, Legal Practitioners Fund, sorry. Legal Practitioners Fidelity Fund, like that, Legal Practitioners Fidelity Fund. And in this case, remember, we have received in the investment account, so we credit in date August 20XX. We are crediting, and its interest in a section what? 86.4. And the interest, how much is it? 2035 multiplied by 5%, like that. That is the interest. Okay, and when it comes here, then we are told here, it shows interest, and the bank is already paid because the bank is on the sweeping system. Okay, so you need to understand the sweeping system. Sweeping system, when you open your accounts accordingly, according to the sections that are given, you go to the various banks. The fund, the Legal Practitioners Fidelity Fund, has already made arrangements with the banks to say if it's a trust account, at the end of the month, you can sweep over, you can pay us what is due to us. If it's a section 86.4, you can pay us what is due to us. So the banks, the moment you open these accounts correctly, then they automatically then pay it for you. So it eases the pressure from you to do EFTs. If you've got a lot of investment accounts, then it is easier. So you should open your accounts correctly, and you should not open money market accounts because they won't perform those functions. So they are specific. The accounts should have reference. If you can tell the bank it's a section 864, they understand it because there's a standing arrangement in the practice which has been done for your practice. Okay. And then we are told that we are paying already to the bank is already paid. So when we check our bank statement, you will find these are the transactions on there. 2035,101.75. So it has already paid. And in our ledger, to complete the double entry for this particular transaction, then we also pay off. So it's a payment from the section 86 for account, how much? 101.75. Okay, so we have received, paid. So our double entry is complete. So every transaction should be recorded a double entry like that. Okay, and when we go back to our cash book, so the idea here we are recalling. So when we are recalling, you would find in the account, we are going to find our account with 751,933.25. This is what we are going to find, which is this less what has been already been paid. So that is what we are going to recall and transfer so that we can finalize our matter. Okay, so it is now going to the trust account, can call it bank account or trust account. And how much are we taking? Everything back into trust. Okay, this is us recalling. We find this is us recalling everything which is in trust. We take it to, because the fund has already been paid. It is paid directly from the section 86.4. So in your trust account, if you pay the fund from there, this transaction is not occurring in the trust account. So why are you paying from there? Because you will not find it on the bank statement of our trust account. So you should account for it directly from the section 86.4. Okay, we go to our trust account. We are receiving this money that we've recalled. Okay, so it is coming from Mr. AP. Our reference. Let me just copy to make it faster. Our reference, and then it is coming. So it is our section 86.4 withdrawal. So it is coming from our section 86.4 account. And how much is it? This is the amount. I'm going to copy. I'm going to copy this amount. 751,933.25. 751,933. 751,933.75. 751,933.25. 0.25, like that. So this is what we are receiving. Okay, so we've done our double entry. We've done our double entry. We've shown the money came in. Here we paid it into the section 84. Here we received it back. Okay. So section 86.4, that we receive it back. So after receiving it back, what do? We are told that on 30 August 20XX, the seller is the agent, buyer are paid. An invoice is raised and transfer the fees plus cost to the business account. Okay, yeah, that is a mouthful. So we're going to do a lot. So what do we start with? Let's start with paying the seller. For 30 August. Okay, so in us paying the seller, we also have to do a manual journal. There's no movement of cash, but this amount that we have received, the 1.7 million, will eventually have to go to the seller. So we've got an element of a more of like a manual journal that we have to raise, because we are transferring money from Mr. Happy's account, because we didn't combine it into one file. We separated the file into the purchaser and seller. So we're going to transfer money from Mr. Happy to the seller. How much are we transferring? So it's a manual journal that we are going to record. Mr. Happy is having a credit balance, and then the credit balance is to move over to the seller. So we are going to debit Mr. Happy, and if it's Meta 20XX/151, and how much are we debiting him with? 1,750, like that, because this is the purchase price. And we're going to credit Mr. Seller. So this is for illustration, good for you. If you record these journal entries, then you can track the matters. How much? 1,750. So we then record this in our trust ledgers before we can pay. Let's record that. So we start with Mr. Happy. So Mr. Happy, you can see he's got 1.7, which now on 30 August, now that the property has been registered in his name, we can now move it, or we're supposed to do it on the 28th. We can now move it to Mr. Seller, because now that money belongs to Mr. Seller. So it's the settlement, the final settlement amount. How much? 1,750, like that. Okay, happiness. And then we go to Mr. Seller. We do the double entry. 20XX, and then this is from Mr. Happy. Okay, so he's happy with the property purchase, so we show it like that. Okay, so this is the double entry. So I guess upon registration, let's say upon registration, which is the 28th, that's when we then record. This is the manual transfer, because already if it's registered, then it means Mr. Happy is got title to the property, and Mr. Seller now should show that he's got money into his account. Okay, and then the next thing, let's pay Mr. Seller. Remember, Mr. Seller, in his payment, we have to deduct what is due to the estate agents. Okay, we have to deduct what is due to the estate agents. It is his responsibility to pay the estate agent, and we are told the estate agent's fee is 87,500. So we are told that is the amount. We assume it includes VAT, final settlement according to their agreement. So we can come 30 August. Let's start from Mr. Seller. We account for his transactions. And then this is now the estate agents. Estate agency. How much? 87,500. And also we'll pay, let's summarize at the side, pay the seller, Mr. Seller. So this is the final settlement after we've paid these obligations. And in this case, it's 1,750 minus 87,500, like that. So we are paying Mr. Seller 1,662,500. So when we go to our ledgers, so we go to Mr. Seller's ledger. So 30 August 20XX. Okay. For the bank account, we pay the estate agents. How much? 87,500, and then we do the final settlement to Mr. Seller for the property sale. Settlement, how much is it? 1750 minus 8751. Okay, so if you can look at it, if we are to add for Mr. Seller, so we add both sides, it should balance. You can see if we say debit side minus credit side, we are done. So Mr. Seller, we have accounted for Mr. Seller for this particular file. Okay, we are done. And for Mr. Happy, we are told is our final instruction. The buyer is also paid. Okay, so how much do we pay the buyer? Okay, let's add up. Buyer is paid. Sorry, before we can pay the buyer, let's raise our invoice. Transfer plus disbursements. Let's raise our invoice. And if we can go up there, we are told attorney's fees plus costs is 33,803, and then there's VAT of 4852.50. So if we can come workbook, remember our workbook. So this is a trust. This is a trust transaction. So we do not show it. We do not show it on our equation because it does not affect our assets. So this is a trust transaction. So I was just showing you where there's no cash movement. Where there's no cash movement, we record by use of journal interest. And then in this case, it's an invoice, no cash movement. We are raising our invoice 30 August. We've fulfilled, we've lodged, we've done our fair share, and then we are recording. So this is, remember, business as well as trust side of things, but this is the business side. Okay, so this is business. So we start just like what we did with Mr. James. So it is going to be Mr. Happy. And this file reference 20XX stroke 151. And how much are we recording? Shouldn't highlight. Okay, how much are we paying? How much are we debiting him? We are told it's 33,803 plus 4852.50. So where is this coming from? Here we are told here. Okay, and that is him. So remember, we said fee plus disbursement plus VAT. Okay, and what is our fee? Okay, so the disbursements, they are there to cover they are there to cover the expenses that will incur in terms of paying the deeds office and everything. Usually we are given an account which is combined, then we pay including a lot of other matters. Also, when we use systems like Ghost Practice, like for generating the documents, we would find we receive just one global account. Windid, for searching the property searches, for parties, we are given one global amount. So we collect that amount and then it forms part of our disbursements. So how do we determine our fee? So how to determine our fee? We are given the VAT. So most of these disbursements, they are on behalf of our client. So they do not attract VAT. But if we look at the VAT that is paid, it's for our fee, and it's 4852.50. So we want to determine our fee. How much is our fee excluding VAT? So it's going to be the amount 4852.50. So you should go back to that layout that I gave last week. So out of there, this is our fee, 32,350. And then how much is the VAT? For the VAT, remember it's for the benefit of SARS, so that one we are already given. So fee plus VAT, if you add it up, it comes to, let's add it up. It comes to 37,202.50. So the difference, it's just for recoupment, disbursement, recovery. So we are going to use this then to pay the petties and everything. And how much is that? 38,655. 655.50 less 37 or 2.50, or you add up on top. So I hope this would cover all the other costs. I hope so. Okay, so this is for covering the expenses. So when we are accounting, so this is more of like an account that will throw in all the other disbursements that would have incurred, or if you can split, then you throw in the disbursements for Mr. Happy, then you knock it off there. Happiness. And to record this is the business side. Then we are going to record in our business debtors account. It's Mr. Happy. File 20XX stroke 151. Like that. So here's our data on 30 August 20XX description. So it is fees, VAT plus disbursements. How much is it? Let's pick it from our worksheet, which is this amount, 38, like that. So this is for Mr. Happy. And from there, we record our fee. Remember, we go back to our worksheet. So we've got our fee, which is 32,350. We go to our general ledger. Here's our fee account, 30 August 20XX. So this is for Mr. Happy. And then it's meter 20XX stroke 151. And how much is our fee? Let's pick it from our worksheet. This is our fee. And then we record the VAT. I'm just going to copy here. The VAT is coming from. So we are being specific. And how much is the VAT? We are given there 4852.50 from this meter. And from there, we record the disbursements recovery account. Because this is not our fee. And if you can create this account and you're able to distinguish it like this, then it will be easier for you to record transactions which are not fees. So that's how I normally do it, separate and then show that this is not fees. Okay, so our disbursements recovery, it's coming from Mr. Happy. How much? So that when we are accounting to SARS, then we can show we are not being paid VAT for this particular account. When we are paying our disbursements, we are utilizing this fund to pay the wind deed, we are utilizing to pay for the meter. Okay, so this is recording a non-cash part of the transaction. And then after doing that, let's now record the cash part of the transaction. Cash part of the transaction, 30 August, we are doing our fee transfer. So it's coming from Mr. Happy. So it's fee, VAT, everything, disbursement, transfer. Trust transfer. So how much is our total that we are transferring? It is going to be 33,803 plus 4852.50, like that. That's the total we are transferring. And out of that, then we do the double entry into Mr. Happy's account with 30 August 20 XX. It's our from the bank, and it's a fee transfer, fee plus disbursements plus VAT transfer. Okay, how much is it? We come to our trust account, the same amount, we pick it. So we have done our double entry. Here we've paid out of trust. Here we have done the double entry. Then let's receive it in the business. Come to the business cash book. It's on the 13th of August, 20XX, and it's Mr. Happy, and it's a Ometa Y20XX stroke 151, and it's a what? Trust transfer. We can show that it's coming from trust. Even this one was a trust transfer, so that we show it's coming from the trust account. And how much are we transferring? Fees plus VAT, 4852.57, like that. That is what we are transferring. And then this is a receipt in our book. What do? We also go to our creditor, to our data, sorry, and then we show that we have received the money. I hope you can follow through, you can play through, you can repeat. The good thing about this recording is that you can rewind and see how we have done it, And when you are attending to your assignment, then you'll be able to record the same way. And how much have we paid? We go to our bank. How much have we received? This is how much we've received. Okay. So if you can look at it, Mr. Happy sorted, is happy, we are happy, our fees we've collected. And then the only thing that we are going to do is that we're going to look at his creditors ledger, trust creditors ledger here for Mr. Happy, because we haven't balanced it out. So we want to see if he's still owing or we are owing him. Okay, this is it. So if you can have a look, the credit side is higher. It is higher by 1933.25, and this is because of the interest that he has earned in the investment account. So we need to pay him. So how do we pay him? We go to our cash book. Even on our bank account, we do an EFT. After doing an EFT, we show that it's a what? Interest payment. We are paying him his interest. How much is it? 1933.25. This is it. So it's a payment out of the trust. And then we come to our ledger for Mr. Happy. We make him happy because he gave us instructions, he gave us money. We were trusted with the matter. And this is interest payment. Like that. To the bank, we pay 1933.25. So if you can look at it, this is now 0. This side minus that side, we come to 0. We are balancing. So we are happy with our conveyancing matter. So if we can have a look with Mr. Seller, we are balancing. With the LPFF, we are balancing. So our ledger accounts for this matter, crispy and perfect. Okay, our cash book, of course, it depends if we've got other matters, then we look through and we continue with the other matters. So in this case, we have a collection matter. We have a collection matter that we also have to record. Okay, I will proceed and record from the collection matter, and from there we continue. Collection matter Y20XX 152, 15 August, instructed by Schoeman attorneys to collect an outstanding debt for their client amounting to 50,000 from Mr. Park. So here we've got Schoeman attorneys. They are instructing our firm. What are we doing? We are instructed to collect 50,000. So Mr. Y's practice is instructed to collect 50,000 from Mr. Park. Okay, how do we record that transaction? So this is just an instruction. We haven't done anything. It's on paper. We have to collect 50. So only after we've been paid, that's when we start recording. So we are told we appoint, which is Mr. Y appoints a trusting agent, and the fee is 750, which we pay immediately. So the firm pays immediately. So as you can have a look at this transaction, we haven't received any money from Schoeman attorneys. Okay, this is a correspondence matter. We are handling the matter on their behalf. We haven't been paid anything. So for us to pay a trusting agent, what do? We then have to pay out of the business account. And this we are doing for Schoeman attorneys on behalf of their client. So our client would be Schoeman attorneys. All right, let's record it. So our first transaction is the tracer. So business cash book. Okay, which day is this? 15 August. 15 August. Let me leave probably that line. 15 August. So it's a payment out of our account. So I'm starting by recording all the trust transactions from there. Then we go to the business side. Trust, we're instructed paying the tracer. So which matter? It's Schoeman attorneys. And then it's matter Y 20 XX 152. And this is a tracer. How much are we paying? 750. Okay, so this is the first leg. It's a payment out of our cash book. And what then do? We then go to our business debtors. So Schoeman attorneys, it will become our correspondent data. Schoeman attorneys and meta Y20 XX 152. Like that. Okay. And then in this case, Schoeman attorneys is our data. We've paid. So we've done a credit entry. We've paid out of our account on the 15th of August. So we have to recover from Schoeman. So we do not create, I will always emphasize this, we do not create a ledger account for the tracer. It has got nothing to do with the firm, but it is something that we are doing on behalf of our clients. And then what we are just doing is to record on behalf of the client so that when we are accounting to the client, we can show them we paid 750 for you. Happiness. So you do not create a trusting account, you do not create a sheriff's account, you do not create an advocate, you record them in, unless if you have not yet paid them. then you receive an invoice from the advocate, then you can then show that the firm owes an advocate and he has to collect from the client. Okay, so this is how we do it. And then we are told, after receiving details from the tracer, the firm contacts and sends a letter of demand to Mr. Park. Remember, we are claiming, we are collecting from Mr. Park, and then we receive details, we contact him, phone him, and then the next thing, we demand letter of demand from Mr. Park. And then on 25 August 20XX, Mr. Park responded, gave his terms, and paid 30,000 and said balance would be paid on 15 September 20XX. Okay, so currently what we do, we've received 30. So in our trust, this is a trust creditor, we record on the cash book, we are receiving money here. How much are we receiving? When are we receiving? 25 August 20XX. And this is for Schoeman. We are doing this on behalf of Schoeman attorneys. And how much is this? Schoeman attorneys, and it's Meta 20XX stroke 152. And this is from Mr. Park. You see, we are putting more detail. And how much are we receiving? 30,000. Okay, so this is a receipt. We do our double entry, which means we come and create a ledger account. I'm going to copy. We create a ledger account for Mr. Schoeman. Okay. Mr. Schoeman, or Schoeman attorneys, which is our correspondence, and file number 152, like that. Yeah, 152, and we are receiving, so 25 August 20XX. So we show in our bank we received from Mr. Park how much? 30,000, like that. Okay, and then after that, we are told on 30 August 20XX, Mr. Y accounts to Mr. Schoeman and raise and transfer the fees according to a 1/3 fee allowance. So in this case, we are only charging a collection fee. So let's assume in this example, the collection, let's assume a 10% collection fee. 10% collection fee. So if you go back to the Legal Practice Act, I think each year they gazette how much maximum collection commission can you collect from your clients. Okay, so in this case, we assume a 10%. Okay, so what do? Go back to our worksheet. Remember, this is a non-cash transaction. We have to record it. It's what, on 30 August. 30 August 20XX. So it's going to be Schoeman attorneys. How much is it? And it's for our reference 20XX stroke 152. And how much is it? It is going to be 10%. Okay, so we collected 30,000 multiplied by 10%. And then we have to also add VAT. Remember the VAT part. How much VAT? 15%, so which is 1.15 if you go back. Okay, so we are going to collect, and then the fee, including VAT, it's 3,450. Okay, and out of this fee, out of this that we are collecting, we are going to share it with Mr. Skuman. Okay, we are going to share this with Mr. Skuman. So a third of that will go back to Mr. Skuman. Okay, so a third of that, according to the third sharing rule, goes back. A third allowance will go back to Mr. Skuman. Okay, so it's a third allowance. I'm just going to leave it like that. A third, and for a third, so it means this divided by will go to Mr. Skuman. So we are going to do a credit. So we are still working out our journal entry, and then we will record it in our transactions. Okay, and what is it going to affect? Our fee account. So how much is going to go to our fee account? Remember, amount including fee multiplied by 100 divided by 5 will give us our fee. Okay, all right, we are separating the VAT. Okay, and in our fee account, remember also it is affected by the 1/3 allowance. So how much is it? Our fee affected by the 1/3, and this 1/3 is going to go to Skuman Attorneys. Okay, 1/3 allowance to Skuman Attorneys. All right, and what is next? It's VAT account. So when we collect the VAT, we are going to share it also with Skuman Attorneys. How much is the VAT? 3450 multiplied by 30,000 multiplied by 10% multiplied by 15%, which is 150. So it's 3,000 plus 450 to give us this one, 3,450. And that VAT account also, it is going to be affected by the 1/3 allowance for. And how much is that? Is divided by 3, like that. Okay, so this is going to be our correspondent journal account. Like that. If you add the side, you compare it, it should give us, it should equal, so that it's adding up. So we want to post this into our ledgers. So let's start with Skuman, with in the business. Remember, this is business side of things. We're just recording our fee and show that we are sharing. So with Skuman, it's our business data. Go. So the first one, 30 August 20 XX. It is our fees in total plus VAT. So it is collection 30 multiplied by 10% plus VAT multiplied by 1.15. So this is inclusive. So we add the plus. Okay. It's a plus like that. Then 3, 4, 5, 7. But we are sharing it. Remember? We are sharing it. 30 August 20. So he's not going to pay us in full, as in he will retain. So fee plus VAT, and then this is the what 1/3 that he's going to retain. How much? We've worked it out. 3450 divided by 3. Like that. Okay. And then we record. We are now recording our fee plus VAT, our fee plus VAT. We are recording it into our fee account. So where do we go? To our business general ledger. So when we go to our fee account, 30 August 2011. So it's common attorneys and file 20XX152. Okay, how much is our fee? Remember, fee excluding VAT, 30,000 multiplied by 110%. But this is not all hours. We are sharing it with August 20XX with common attorneys. Schoolman. So it's their 1/3 fee allowance. Okay, so how much? 3,000 divided by 3. So now we are recording the same way that we worked out. Okay, and then the next part, it's the VAT component. So if we have it registered, you remember the 3 steps: the data, the fee account, the VAT liability account. Okay, and then this is Schoolman attorneys. Okay, I'm going to copy from here. Man attorneys, and in this case, what is the VAT? We have already calculated it in the worksheet. It's 3,000 multiplied by 15%, which is 450. And then the same way that we have done, the VAT will pay it back to Schoolman attorneys. How much? To be 450 divided by 3. Hey, happiness, this is how we record, how we split. So 1,000, 150, and then this 150, you find it in the data ledger. Here, this is where you find it, 11570. 345, if you go back to our general ledger, it is this 3,000 plus this 450. So we've done our double entry. This is how we record our conveyancing transaction. If you require this worksheet, then you should let me know and I will post it on the system for you so that you can be able to trace how I've done it. But you can always go through the video and then you watch again. All right. So this is how we account for the Mr. Schoolman. We raise our fee and then we want to account to him. We want to pay him. How do we pay him? So we go back to our data ledger. Okay, this is our data ledger. So what is the fee overall? What is it that we are supposed to transfer to us? Okay, let me reduce. Okay, this is the view. Hopefully you can see. This is the view. And then if you can see this side, this is the total. That is the total. So we've got a difference. So on 30 August, what is due to our practice is our trust transfer. What will transfer to us would be 3,050. So our business data account, our meta ledger, is the one that will balance off. Remember, we have to recover our 750 and we have to recover our share. How much is our share without the 750? Okay, let me leave this. How much is our share? Our share is basically this minus that, which is 2,300. And then 2,300, we are then going to add the money that we paid to the trusting fee. Then we come to 3,050, which is here. And then so we have done, this is the business side, 3,050. And then this money we should receive it in business. So I will start by balancing off the correspondence account. And then this is what we are going to receive. So in our business cash book, we're doing reverse. We are going to receive from Mr. Skuman's matter. So Skuman attorneys, it's our reference Y 20XX. We stroke 152. We are receiving 3050, and this is a what? A trust transfer. So this is going to be a trust transfer. So we work it the other way around. The trust transfer 3050.50, 3050.00, and then which means if it's a trust transfer, then even in our trust cash book, then we have to pay it's coming from the trust, it was paid from the trust account, then we also have to record it as a payment. Attorneys, that, and how much? It's file Y20XX152, and then it's a trust transfer like that. How much? 3050.00. That, but remember, we received 30,000. We are transferring 3050. So this part we are going to also show it in our ledger. Then we come here. This is our ledger on 30 August. Trust creditors ledger. And this is a trust. So the trust transfer, we are transferring our fees plus disbursement. How much? 3050.00. So it means at the end of the day, to Skuman attorneys, we're going to pay 26,950. So we come here, 30 August. And then to Skuman attorneys, so this is payment, ne? Settlement, including their 1/3 fee, is going to be 30,000 minus 3050, like that, 26,950. If we go to our ledger to complete our double entry so that we close this account. So this is settlement payment, or we are settling the account. We are done on the 30,000 that we have collected. Okay, so if you can have a look, it balances to 0 because we've paid. If this matter we're going to pay it on the 1st, then you would find it would spill over to the 1st of September, or if we're going to pay on the 5th, it would spill over to the 5th of September. Okay, happiness. This is how we record. So with our trust transactions, you can see these are our ledgers, been recording, everything looks perfect. And then we are done. And then the last element of the trust, I'm going to continue and do the business account. I'll do it as part of our webinar 2. And then for the trust, I'm going to show you how to record the trust, this last element. So we are told that there is a supplementary cash book and a bank reconciliation that we have to prepare. On 1 August 20XX, Mr. Y downloaded the trust bank statement, and it shows the bank credited interest amounting to 680, and then debited bank charges amounting to 345, transferred 45 Rand from the business account for the VAT portion thereof, and paid the LPFF 308. So this is in our trust account. Then we're also told a deposit amounting to 18,000 was made by Mr. Ember for Meta Y20XX153 on 31 August, but it had not yet reflected, it had not yet been recorded in our trust cash book. The bank balance was 157,500. Okay, so which means now we balance off our cash book and then we do a supplementary cash book. Okay, so we are more of like done with recording our trust transactions. This is it for the month. With that one, August came, we close off, we balance off, and then for the sake of, then we will do a supplementary cash book just to show we haven't finished recording the transactions. So we calculate our balance, we carried over, which is we take the side less the side. So we've added up everything. So if you can come, we add up. Okay, and then here we add up, and then this is the bigger side less the smaller side. That's we get 139,500. So in our trust account, we are sitting with 139,500 like that. Okay, this is end of month. We have balanced our cash book. So this is our carried forward, or let me minimize, or our closing balance carried forward like that, or this is our closing balance. Okay, which will come as our 1st of September 20XX. September 20XX like that. So it's going to be our opening balance. That's what we're going to have in trust. And then sometimes we have to check whose money is it. Remember, we are having an opening balance, which was Mr. P's money. And usually too, we have a lot of people, so we can't track. And then we've got Mr. James. Mr. James, if you can check, we still have a balance. So if we are to do a trial balance for the trust, you will find we still have money in the trust account. Okay, happiness. So if I'm to do a trial balance for the trust, let us, before I can do, let us do that. So this is the trust. So they call it a trust position. Okay. So trust position, it's we are doing it that one August 20XX. Okay, so we start with our cash balance trust. Cash book. How much are we sitting in with our trust cash book? Remember, trust cash book would have a debit balance like that. And whose money is this? Let's track it. So we said we've got Meta for Mr. P, which was Meta, I think it's the first, the opening balance, which is 20XX stroke 138. So this Meta, we are carrying it over. He is our creditor, so we'll have a credit balance. So if we go to our trust ledgers here, you see this is Mr. P's Meta. When you balance off, this is going to carry over. And the next one would be Mr. Skuman. And then the rest, we have not Mr. Skuman, Mr. James. The rest we have managed to pay, clear the matters they finished in the current period. But you find in reality, these matters, they continue running. So these ledgers will assist you in tracking the matters like that. Oh, sorry, it's a creditor. And then how much is it? Where do we get the amount? We go to our ledger for Mr. James. You can see the side. If you are to balance off, let me first of all start by balancing it off, because I have not done the balancing off. It will be easier when we balance it off. So this is the balance. So when we take that one, August 20XX closing balance, it's going to be the 137,000 like that. Okay, so we are balanced. Even here, our closing balance, that one August 2011, our closing balance be 2,500, just like that. So we'll carry it forward. So these are the only accounts that we have that will carry forward. So even in our trial balance, Those are the accounts. So this is 2,500, and then this one is 137 here, 137,000. So if we can add up like that, we compare the two sides, you can see this is our trial balance, this is our trust position currently. Before we can do we can do the supplementary. So this is our trust position, and if we do the supplementary that we are told that on 1 September when we downloaded the bank account, then we realized we had not recorded what the bank charges that went through because we were not aware they go overnight. So we do our supplementary, we can just do an extension. It's an extension of our cash book. Okay, this is our cash book. So we do an extension. So this is our closing balance. I'm going to just do an extension here. That I extend it starting from here, from the 39,000. Oh, all right, let me start it from here. Okay, this is too big. Let's minimize it. Okay, and then here we are still in on 31 August because we haven't recorded all the transactions for our supplementary. So this is now more of like our supplementary, an extension of our cash book. Okay, so this is our opening balance that we're given, and we are told that there's a credit interest. So remember, money in the trust account, interest that we receive on the money in the trust account, it is the net is due to the legal practice fund. Okay, this is interest, and in the trust account, guys, interest, trust accounts in interest. So do not relate this to an investment account. So this is the interest. So when we go to our ledgers, we will create a ledger. So it's a LPFF, create a ledger. It's this one. It is our trust account. So you don't have to create for every trust account. So if you've got several trust accounts, you can just come and then distinguish which one is which. Okay, so this is 31, but we have to separate them from the section because those are reported separately. So how much is the interest? So it's coming from the bank account. So you can indicate which bank account and then its interest. How much is it? 650, 680. Okay, and bank charges 345. So the bank will just take what is due to them, which is their bank charge. The bank charges in full. They take their bank charges in full. So how much is the bank charge? 345. So you see it on the statement, it's taken, there's nothing you can do. 345. So when you come to our ledger, we also record it. But remember, because the interest is higher, then we can recover this from the interest before we pay, or before even the bank, before they can pay over, they recover this. But there's a complication. The fund says the firm is supposed to claim the VAT. So the VAT portion of the bank charges is supposed to be claimed by the firm from SARS. So what will happen? The fund expects the firm to refund the trust account, and with them, it is the amount net of bank charges that they will allow as a deduction. Okay, so that's where here it's written transferred 45 rand. So on a sweeping system, the bank will automatically do that for you. The bank will automatically do that for you. So this 45 rand is being transferred from the business account to the trust account. So trust, what is happening? We are receiving, you see. So it's VAT transfer from business. How much is it? 45. Which means we also need to record this transaction on our business side. So let's finish on the trust ledgers. So we are receiving, and this is what the VAT recovery. So it's more of like a recovery from the business account. How much? 45 rands. Okay? So this double entry is finished. Credit received, but catch, it affects the business account. So we have to go to our business ledger and we paid. How much is it? So it's a trust account VAT recovery. So how much is 45? And they are saying recover it from SARS. How do we recover it? Then we are going to claim it. So where do we claim it? In our general ledger. Remember, we've been collecting VAT for SARS in various matters. Then in this case, what do we do? 20XX. So this is trust VAT recovery. So we are recovering it from there, the 45 rand. So you can see it has got all transactions that are coming in. Anything that involves the business account and the business, it will carry on 4 transactions, which is 1. And then we go to our cash book, business cash book, 2, into our trust cash book, this one 3, into our ledger 4. You see, that's how we record this transaction. And then at the end of the day, we are told that we paid LPFF 380. So this amount is just being paid out of the trust account. So it's easy. So you see, they will write their account 54 something on the bank statement, which shows that the money has been paid over. And when we pay it over, we also go to our ledger. We also record it. It's coming from the bank. So now we are paying. It's their payment. You can see it is the amount that is outstanding, and then our ledger is finished, it's closed. So we have recorded our supplementary transaction, and though we are also told there's a deposit amounting to 18,000, was made by Mr. Ember. So it's a trust deposit. So it's a receipt. Remember, receipts. So we receive the money on 31 August. And let's see, Mr. Ember. Okay. Mr. Ember, file number L20XX/153. And how much are we receiving? 157, 18,000, sorry. 18,000, just like that. Okay, and then we also create a ledger account for Mr. Ember. A ledger account, and copying this one. Okay, Mr. Ember. Delete. Mr. Ember. It's Y20 XX/153. So anything that is not in our cash, which is not an error, a bank error, we record it as part of our bank record. If you can read through in our the study guide. It will guide you on what to record. So in our case, we will record anything that is not in our cash book, that is on the bank statement, which is not an error. But if it's an error now, we put it in the reconciliation statement so that we can reconcile it. Okay, happiness. So our deposit, okay, Mr. Ember, we've debited, we've received in the cash book, and now we credit his account like that. So it's the bank account, so we received, and it's how much? 18,000 for his meter. Okay, so if we are to balance off, so closing balance. So we haven't done anything. It's going to move to September. Okay, or we are already in September, but we are moving. When we start, it's there. And then when it comes to our cash book, we balance off again our supplementary. So this is our supplementary cash book, just an extension of our cash book. We balance it off. So how do we balance it off? We do the same. We add up. You see, like that. We add up this side. We compare it with the other side. Okay. Where do we compare it here? So this side less that side. And then we are having 1575. Okay, so this is now our supplementary cash book. We've recorded everything that is in the bank statement because everything else is there. Everything else is recorded, but we only realized these transactions were missing. So after recording, you can see 157,500. So when we do our bank reconciliation, bank recon, okay. So bank reconciliation. So this is why Atenes Inc. So let me extend, make it large. And this is bank reconciliation statement for when 31 August 20XX. Okay. We've done our supplementary cash book. So our balance, let's start with the balance as per bank statement. How much is it we are given here? It is 157,500. So as it is, we don't have any other errors. We don't have issues. So if we can come to our balance as per cash book. So this is a perfect scenario. So in reality, sometimes you find there are differences. So you guys, then you need to deal with the differences. So here is our closing balance, 157. So we are in agreement. We are in agreement. So everything balances this minus that. We are balancing. Perfect. Happiness, happiness. So this is for bank reconciliation. I hope you correct the typo. And this is for our trust account, trust bank reconciliation. So this is how we do our bank reconciliation. Okay, so I have assisted you with the assignment. And then this is how you answer the various questions that are there. I have treated it as one practice, but the concept is still the same. And if we go to the trial balance, you would find then you can update it with the supplementary information. We can update it with the supplementary information. What is our supplementary information? Is that this was pre-supplementary, but now we have got Mr. Ember, who has deposited his money, 20XX/153, and our bank now is changed because we've updated it with the supplementary information. So here we go, 157, and Mr. Ember, if we go to his ledger, trust ledger, there, Mr. Ember, this is the balance we are carrying forward. And if we can have a look at it, we are balancing. Okay, thank you very much. This is the end of our webinar, and we will continue again with recording the transactions and in the next webinar. Wish you all the best. Bye-bye. Recording.